Now, it's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Tuesday evening, November the 8th, 2016. Crude oil is range-bound and trying to finish rotation back to the low of the range. E-mini S&P is bullish and trading sideways inside the middle of its range. Gold is bearish with a very strong spike in range. And the euro is also bearish and trading at the lows of a channel after reaching its measured move this evening. If you haven't been paying attention, it's election day, and we're only hours away from seeing some of the first official results, with the exit polls being only just a few moments away here this evening. No matter what happens tonight, we know our strategy for both the bulls and the bears, and we're excited for the many opportunities coming our way in the overnight session and, of course, into tomorrow's Wednesday trading session. As always, I got another great newsletter for you guys and gals tonight. Plenty of opportunities setting up here with the election results coming just moments and hours away here this evening. Before we jump into our charts, though, I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. That YouTube video is only a small portion of the entire newsletter. Follow that link in the description. Come over here and join me on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter is ready to go live. Download those charts below the video. Follow that link below the video and have those charts ready on your computer for tomorrow. In the upper right-hand corner, don't forget to grab your free pass. If you're not a member here at School of Trade, I got a free pass for you guys and gals as guests. Come out and test drive the trade room as a guest. And if you're brand new here to SOT, don't forget we get a great frequently asked questions page on our website. That'll give you the who, what, where, when, and why we are known as being the industry leader in trading education and professional grade trading strategies. Guys, what a week we've had so far. Been an incredible week here so far. We had daylight savings time that got us off to a little bit of a shaky start on Monday. Today, surprisingly, incredible amounts of volume and opportunities here today across the board. It was a great day today. It's going to be a great day tomorrow. I'm excited to have you guys with me tomorrow morning in real time in our trade room. Don't forget, we'll be with all of our advanced members tomorrow in our trade room at 8 o'clock Eastern time. Let's take a look at the schedule for tonight and tomorrow, and then we'll jump into, of course, the strategies for tomorrow's trading session. Of course, tonight, though, we've got to start first with China, 8:30 p.m. Eastern time. I don't know if anyone's going to be paying attention to anything else besides the election results coming in just a few hours here this evening. But again, we do have some major news, the CPI and the PPI coming from our friends in China tonight, overnight session. If you're trading the overnight session, which I'm sure a lot of you guys will be watching here with the election. Remember how nutty it was for Brexit, right? We got some big moves coming here, I would assume, here in the next few hours as well, once we start seeing that first glimpse of those exit polls. I'll be waiting for the official numbers. Exit polls are usually pretty unreliable, but that doesn't mean you're going to have some folks, right, paying attention to them here in the short term tonight. Tomorrow, really, there's only one big news event tomorrow, and that is the petroleum status report, the crude oil inventory number. That's at 10:30 tomorrow morning. Be aware, I always leave a 15-minute buffer, 15 minutes ahead, 15 minutes after of that major news report. And don't forget, it's not just for crude anymore. As of really January this year, we started seeing the equity markets kind of piggybacking on the petroleum status report as well. So if you're trading the S&P or crude tomorrow, be aware, after 10:15, expect it to slow down pretty significantly. And of course, after 10:45, right, 15 minutes after the news comes out, we'll go back to start looking for tradable opportunities here on the crude and the S&P tomorrow. Usually crude, of course, being a lot more volatile than the S&P. It wouldn't be election day if I didn't talk briefly here about this. We talked about this last night. It's at most of the time when we see major news coming out, you're either going to get a very slow market or you're going to get a very fast market. Either way, you've got to be careful trying to force a real low volume environment or trying to kind of wrestle a real volatile market. The ideal scenario is to find a direction, follow that direction. Don't try to call tops or bottoms. Don't sell into a big strong bull move. Don't be buying into a strong bear move. If it's not moving, don't do anything yet. Wait for that direction, because the last thing you want to do is try to force a trade. And a lot of times when you have big news kind of pending or big news that comes out, if the markets have already priced in that news information, it may not move very much. So don't force it overnight. If we do get that extra volatility, there's a couple different examples that I can name off the top of my head where you would see some extra volatility here overnight. The polls have been very much positioned in one direction. If we start seeing any glimpse of that being incorrect, like with the Brexit, which we saw back in June, this thing may turn into a very, very volatile session. So use your best judgment, but be careful. As I always remind you guys, there are so many times of the day, of the week, of the month, of the year that we don't need to trade during news, that it doesn't make sense to go out and risk all your hard-earned capital, right? So keep it simple. If you are going to trade here, make a very small percentage of the account, right? Because extra volatility, right, that may come means you don't need to take a lot of big risks, right? And you can get big rewards, right, by only risking a small percentage point of the account rather than your typical full-size risk size. All right, guys? So again, if it's very slow here overnight, don't force it. If it becomes really, really volatile, I'll be sitting on hands. I'll be looking for a directional move and then look to, of course, follow that direction. Promise me, though, you're not going to gamble away all your capital, because we got some real business to do tomorrow in real time in our trade room, which, of course, opens up at 8 o'clock Eastern time. Let's jump right in here tonight. We got crude. We'll go crude, S&P, gold, and, of course, the euro. I'll get you guys out of here as soon as possible, because I know you're all going to be pinned to the television set here tonight, and in anticipation of who will be taking home the new president of the United States. Crude oil is range-bound and trying to finish rotation back to the low of the range after the buyers tried twice to break out to new highs and failed. Sellers have a strong move lower, so we can expect the bears to be looking for selling opportunities at the moving average and the high of that range, with a target going back to the lows and possibly the pendulum target down at $44 a barrel. Once we get back to the lows of that range, the buyers will then start looking for the sellers to try twice, and if and when they fail, the bulls will then look for opportunities to buy it going back to the high of the range in the opposite direction. So, as you can see here right now, we talked about this in last night's newsletter. Same trading range from last night, 44.95 to 44.43. What a beautiful buying opportunity, by the way, off the low of that range from last night's newsletter. We talked about that last night, about 24 hours ago. As you can see here, though, the buyers, of course, trying here a few times. Once, twice, three times. I call this the once and the twice. If you're a student of mine, you know exactly why I call that the two-try rule. It's in the intermediate course here at School of Trade. We've got separation and significance on that. So, of course, that gives me the pendulum swing now. Imagine that trading range. There's a pendulum right in the middle, right? We swing all the way up. And then, of course, anticipating now the rotation from outside that range back to the low of that range, then possibly all the way through, right, to that pendulum swing. So imagine the trading range now, right? There's a balance area right in the middle. The buyers keep trying to run this thing higher here. They fail, right? They're going to give up, take their money out of the market. Other side of the market will attack. Sellers will attack. And, of course, the short-term target for those bears is to get back down to the low of that range. And, of course, that pendulum swing target on the opposite side. So in the short term right now, we're definitely looking for the bears to finish off that rotation. We know that the sellers will be looking for opportunities up at the high of this range. Buyer failure and back down. Breakout, pullback and back down. There are a few different opportunities here now for those sellers to look for. The best one obviously here would be to incorporate that moving average up, buyer failure. You know, when I see a trading range on a chart, I'm always thinking range rotation, two-try rule, focus on failures, use the pendulum swing. So really what you want to be focused is, get that on here, there we go, right? Buyer failures at the highs, right, to sell back down to those lows, and then down at those lows, you're looking for seller failures, right? Seller failures to buy it back up to the high, and then use that pendulum swing to have a good idea as far as where that target will be on the opposite side. So sellers are looking for opportunities here, either back at the moving average or back at the high of that range. It may even try to push outside the range here a little bit, look for that failure, right? Look for that buyer failure to sell it back down again to complete the range rotation, right? From the low to the high, back down to that low, back to the high, right? So if we do find a way back down to that range low, again, there's a lot of variables tonight because of the election. If we do find our way back down to that low, then of course, seller failure and buying it right back up. Don't be surprised though if we do dig a little bit deeper, right, down to that 44.11, down to that 43.99 area. Don't be surprised here if we do get that pendulum swing to swing all the way back, right, in the opposite direction here. So we go up, 2 tries up, down, 2 tries down, buy it back up. The one thing you want to remember is avoid that middle, right? Buy that low, right? Buy that low, going back in, sell that high, right, going back in until what, right? When do we stop fading the edges? When do we stop buying low and selling high? We will stop treating this as a range once we see a successful breakout pullback that can actually hold above the highs of this range. We talk about the 2-try rule, right? Buyers tried twice. After those buyers failed the second time, now sellers are looking forward to selling this thing back into that range. If those buyers would have held that second attempt, though, then obviously this would be a completely different ball game here, and we turn this into a bull market. So as of right now, again, sellers looking to send this price back down to that 44, 43, possibly all the way down to that pendulum swing, and then, of course, right, back up we go and using that trading range until something changes here. And we may not have to wait that long, right, to get something changing because, again, we get the election results coming out probably just a few hours away here as I'm recording this nightly newsletter. Even the S&P is bullish and trading sideways in the middle of the range. It was in the middle when I began recording this session now. You can see the opening bell here now, right, sending price higher. So even the S&P is bullish and now trading sideways at the high of the range this evening, with the bears trying to finish rotation right back to the low of that range where we assume there'll be more buyers eagerly waiting to buy it back up again. The bulls continued their run higher today until they got their double up target and then started trading sideways. The buyers are looking for opportunities using failures at the low of the range as well as a breakout pullback above the high of the range if they can push through the high successfully. Sellers need to see strength through that battle zone for a move back to retest the low, or they will need to wait for price to fail twice at the highs and sell off the highs. Right now, this is a much clearer trend direction than we saw on crude oil. Crude was very much a sideways range here today, and so we're looking for range rotation back and forth. The S&P here now, you can see here, has a bull bias to it. That bull bias, of course, results in a trading range, and ultimately at this point now, the buyers are looking for opportunities here down at the low of that range, or of course up above the high of that range. Again, like we said earlier, we want to avoid trading in the middle of those ranges because that will always be a little bit less reliable. Now, with that said, you'll notice here how we have range rotation from the high down to the low, back to the high, right? It would make a lot of sense here now for the market to rotate back down to that low. Again, a lot of variables coming out in the next few hours with the election results coming out here now. And so here's what buyers are looking to accomplish right now. First of all, if they can get that moving average above the high of that range, I would even go as far as to say get that moving average above the double up target at 41.5. Get the moving average above, hold that pullback above. That should be enough to get those bulls engaged there for a successful breakout pullback. Notice how I'm drawing the moving average on this illustration. I want to get the moving average up above that double up. What I really don't want to do is try to do one of these where it spikes up, pulls back, and now I'm trying to buy into that high. That's usually going to be a much lower reliability trade on that one. What I'd rather see is really get some good strength here, get that moving average to join you up above the high of that range. Again, I'd like to see it above that double up, right? And then, of course, we're going higher. The targets at that point now, there's a measured move up there at 55.5, 21.55.5. That's going to be the measured move target all the way to the upside. You can see that measured move, of course, right here, ABC, and of course, ABC equals D, and that, of course, will be your target there to the upside. What would really be enticing here would be if we could engage this reversal line This is really where the buyers would love to see some buying opportunities here to buy without buying high here. So again, we got range rotation from the high to the low to the high, right? Then back down, right, to that low. If we can get back down to that low, right, hit that 30 and a quarter, tag the battle zone, and of course, seller failure. Remember, we talked about this on crude oil, right? The 2-try rule. So imagine now sellers try once, they try twice, they fail. That's going to be the clue there now, right? Once those sellers try twice and fail, that will be that seller failure.